this was absolutely the right decision to make, right? So the Fed's goal, again, is to take incoming information on inflation, which has fallen substantially since its peak. It's not exactly where they'd like it, and signals on the labor market, which again is not amazing, but not awful, right? Sort of not unlike I say not unlike a meal on an airplane, and take those two bits of information and set monetary policy with an eye towards growth, economic stability, the labor market, and inflation. And it was absolutely the right decision to make, I believe, to remain on hold and pause, any further interest rate cuts or hikes, for that matter, based on the data. The much more concerning thing, as you alluded to, is political interference in the Federal Reserve and monetary policy making. And let's not sugarcoat it, right? This is, a serious investigation into the chair, into other members of the Fed board, political appointees, right? So this is not what you want to see. Between myself, David Tulk, and David Wolf, we have about 20 years of combined experience at the Bank of Canada. And the separation between the political function of government and monetary policy is very deliberate. And that's becoming a blurred line in the US. In my assessment, both the Fed and even the Bank of Canada are likely on hold for some time, right? And that's because there's a tremendous amount of uncertainty right now, right? So we have trade uncertainty, policy uncertainty, interference in monetary policy, the functioning of monetary policy, and layer on that geopolitical uncertainty and volatility as well. Sometimes no decision is the best decision, right? And no decision is not no decision. No decision is we've examined the flow of incoming information since the last time we've met, and we've determined that the best stance for monetary policy right now is to remain data dependent and to keep things where they are, right? Given the flow of incoming information. Again, I always like to say, central banks don't have some magical set of data that we don't have. They're looking at the same Bloomberg screens you and I are looking at, and assessing the economy versus their baseline and making the best decision they can, for the future of employment, inflation, growth, et cetera. And so, there are market probabilities and forecasters who say, oh, I think the next rate cut or rate hike is going to be here or there. I would generally sort of fade any table pounding accuracy in rate decisions that are, towards the end of this year. We don't know, right? As the landscape changes, so do the central bank forecasts, and so do the base cases for those interest rate decisions. But right now, the data-dependent sort of hold steady approach is the right approach to take. Honestly, when I talk about central bank decisions to clients across the country, I always mention the framework that we should be thinking about when we examine a central bank decision is much simpler than what's presented to us sometimes in the ink spilled or the experts on TV. We should handcuff ourselves to two variables, right? So we should, and I talked about this at the start, we should think about inflation and we should think about unemployment. Inflation, again, it was exceptionally high, right? A few years ago, it has come down, it has moderated. It is roughly in the neighborhood of where central banks would want it to be. Again, inflation measures the rate of change in the price, not the price level itself. And the rate of change in the price, the growth rate of prices now, is in the neighborhood of where central banks would want it to be. So call that a check mark, or maybe in pencil. And the other one is the labor market. And again, the labor market in both Canada and the US is okay, right? So unemployment rates in Canada were somewhat elevated. They have fallen. It looks like Canada job growth is sort of coming back now a little bit since maybe Q2 of last year. And in the US, we have had declining rates of job growth on a monthly basis, but we shouldn't expect the rate of job growth and the unemployment rate we had 3 years ago, right? There is a break even that will get successively lower. There's a lot underneath that as well with population changes and stuff. But again, if you look at inflation and you look at unemployment, again, the two most important factors for a central bank and a central bank decision, it indicates that the right stance right now is to kind of stay where things are, take that data-dependent approach.